everyone. Welcome to the kickoff mixer and panel for the Relationships with Money Financial Literacy Program powered by Frost Bank. How y'all doing tonight? Love the energy, love the energy. Before we get started, I want to say a quick thank you to Frost Bank for partnering with us on this program. It's extremely important for us at COSIGN to really create a program that speaks to our community and culture. So please give it up for Frost Bank. Yes. Also, shout out to our community partner, The Deck, for allowing us to host this amazing panel here this evening to kick it off. Give it up for The Deck. And last but not least, give it up to you guys. Financial literacy is something that's really important to us, and for you guys to be excited about us really means a lot to us to have y'all guys participate. This is an 8-week program. Some of you guys who haven't signed up for the program specifically, if you want to sign up, please holler at us in the back. Also, if you haven't registered for tonight's event and you have signed up for the program, please do that. That's a way for us to make sure everybody who signed up is here in attendance. So if you haven't done that, please do that before the night ends. I'm going to give it to our moderator, one of my colleagues and good friend, Christiana Yebra. My bad. I'm going to just say CY. I'm going to give it up for CY. She's an entrepreneur and a CMO at nVenue. She's doing amazing things, and thank you for moderating this amazing panel. And thank you guys for joining us today.
Thanks, KG. Oh, I liked the accent. Wow. Thank you guys so much for being here. It's an honor to be back on stage. I'm excited about in-person events again. It's nice to see everybody. It's been a while since I've seen some of your faces, but thank you again for being here. If you're interested in starting a business or have recently started a business, one of the biggest things is just showing up. So thank you for showing up and being here. We're going to have an amazing panel, but I do want to let you know that at the end we'll do some Q&A. So keep track of your questions. We'll do about 15 minutes or so at the end and want to answer as many questions as we can because I know a lot of you probably have some great ones. So keep track of those. Don't forget them. We'll get to them at the end. But I first want to have our panelists introduce themselves, tell us who you are, where you work, and I always like to say what you're about. Tell us a cause you're excited about. Tell us something you're passionate about this month. Give us something about you. Go ahead.
Hey, y'all. Also, thank you for coming out. My name's Alexis Puente, and I am with the Deck Network. So I am the manager of programs and engagement. So I'm responsible for all of our accelerator programs and coordinate outreach events. Something I'm excited for, right?
Who you are, what you do, what you're about. Give us something you're pumped about this month. What's going on here at the Deck?
What am I pumped out about? We have a golf tournament tomorrow, so we're going to be talking to a ton of different community partners. We also have some outreach events coming up in October. We are partnered with the Social Chica, so really excited about that.
That's great. BJ?
Great. Good evening, everyone. Benjamin Vann, I'm founder and CEO of Impact Ventures, Dallas-based nonprofit that focuses on closing the wealth gap through capital, community mentorship, and education. I would say that we're on our 6th cohort now of supporting Black and Brown founders. We've trained over 150 founders in our 6 cohorts. They've gone on to raise about $12 million in capital plus. I see some of y'all out here in the audience today. Shout out to you all. And I'm actually excited that we've just hit the 1 million mark in capital deployed this year into Black and Brown communities as well. So. We're just at the very tip of that. You know, we just announced Q4 of last year the Dallas Inclusive Capital Fund, which is a $20 million initiative to invest and lend to Black and Brown founders, not looking at things like credit score or access to collateral and a lot of those barriers that exist for Black and Brown communities to deploy in the community. So that's what I'm most excited about. And I'm a recent father of 2. And so if you see my left eye twitching, it's probably because I haven't gotten any sleep in a while. So excited to be here and speak to you about my journey and hopefully help you guys on yours.
Good afternoon, everybody. I'm Chris Butler. I'm a relationship manager with Frost Bank. I help business owners, but my background pretty much spans into business, finance. Also was a founder, started 2 companies. One was a men's grooming club, kind of a hybrid of a barbershop and salon. We had 2 locations in Birmingham, Alabama. One was downtown. The other one was Saks Fifth Avenue, where we had it in their department store. Had a men's skincare line, which was national distribution within Nordstrom's, Lord & Taylor, Belk. We had some spas. So I'm very passionate about, entrepreneurship and, taking that journey and really trying to build something. And I think obviously being here tonight, we can share some of that knowledge, and obviously, things that you guys are wanting to accomplish or questions that you might have. So really excited to be here and be a resource.
Well, we're excited to have you. Thank you guys so much for being here. I want to do a quick, not an activity, I don't want to scare anybody, but I want to see a show of hands. How many of you, and then keep your hands up once I ask the question. So how many of you have started a business? Raise your hand. How many of you want to start a business? No, keep your hands up. If you have your hands, keep them up. Okay, I don't see any hands that are down. So everyone, you're in the right room with the right people. So I want to congratulate you for being here. Again, this is a casual conversation, but I want you to take away, you've got notes. So take notes, listen in, and again, be engaged for our Q&A towards the end. But I want to start off, I think we've all had a business idea, and then we say, well, then what? Where do we get started? And one of those frameworks that you're often recommended if you go to a resource is talking about a business plan. And I've always kind of laughed, like, oh, well, just let me get started. I'm not going to sit here and document it. But there's some importance to crafting a business plan, and I feel like a lot of entrepreneurs never know where to start. And Alexis, that's something that you guys have chatted a lot about here at the deck. I want to know, where do we start? How do we start to map out a business plan?
Yeah, so first, I just want to say your business is never too small or too simple to have a business plan. It's incredibly important. So your business plan, it's going to be basically, planning out your roadmap for your journey. So thinking about the financial history, if you're not in the ideation phase, looking at financial projections, and thinking about your financial goals. So whether you're thinking about, do I want to be a lifestyle business and just support, me and my family's income, or do you want to be a growth-focused business? So figuring out, which types of capital are important for you, and especially if you're in that ideation phase, I think, maybe starting out with the lean canvas, right? So just a really simple, condensed document, so it doesn't have to be too overwhelming. But regardless, if you're going to lending institutions or even talking to different investors, right, you have to have something. So it's really important.
What are the kind of core pieces of a business plan that you feel like people struggle with the most? Like what are some of the hard elements to get started on?
So I would say the thing that I've heard the most, that's the hardest, right? Financial projections. So it's just some numbers and how to determine, like, how do I even determine my pricing for my goods and services? So one thing I would suggest, finding a SCORE mentor and just figuring out, okay, there's a template online and you can figure out, okay, if I have a fitness studio, how can I charge for this service? So how much time am I putting into it? My background, right, my expertise, do I have weights? So what is the cost of the equipment I'm using?
Yeah, those are hard to do and hard to project when there's so many variables. BJ, I wanted to ask you, you get to see a lot of applications come through Impact Ventures, and I'm sure a lot of great ideas, some that you're excited enough to invest in and have joined, but probably a lot that you have to pass on. So I feel like you've got a good visual on the different ideas that are out there. If startups come to you and have a great concept, but it's a highly competitive space, or there's somebody doing just exactly that, like what are some basic things companies or company founders and entrepreneurs can do to know if they're on the right track of a highly competitive space? Do they need to check on IP? Does somebody have a trademark on this? What are recommendations you give to someone who says, I've got a great idea for hats, where do I go?
Yeah, great point. And first I want to differentiate the terms, right? Because I think in business we often get bogged down with terminology, right? And the difference between a startup and a small business, right? So if you're coming to me as a startup, right, ideally the formal definition of startup is something that's never been done before, right? A startup is a product or service in search of a business model, right? Versus a small business, that is something that is replicable. You can find it in the market. Say you want to start a coffee shop or a laundromat or a hair salon. Those things have been done before, right? But a startup like a Uber or a Lyft or Airbnb or just any of these tech startups that you see out there in the world of startups, typically those business models, you'll hear the term like product market fit, right? Or you hear the term traction, right? Those startups are trying to find a business model. They're trying to find traction, right? So first I would say, like, define if you have a small business or if you have a startup, right? And then once you know which one you have, then think about the long-term game of, like, do you have a lifestyle business in terms of, is this something that will replace your job? Maybe you're good at marketing and you start a marketing firm, right? And it allows you to afford the lifestyle but still do the same job, right? Or is it a traditional legacy business? Is this something that you want to pass to your kids? to your grandkids, and you want to keep it in the family, or is it a venture-backed company, right? And this is a company that you're looking to grow really fast, scale really fast, and sell, right? So that means that there's an investor is looking to get a return on their capital once you sell or liquidate that business or IPO in that. So once you figure out those things first, then think about, okay, what's out there in the market, right? And so what you're really pointing to is, how do I identify my market, right? There's a ton of tools out there to use. One is a very, I would say, complex and robust called Gartner. It's a tool out there that you can use that really allows you to do deep market research on your business or your idea. If you have a small business, there's probably a lot of already history out there that you can see. Say you're trying to set up a brick and mortar, right? There's gonna be a lot of information around the location you're trying to put it at, proximity, like is there another hair salon within 5-mile radius of where I wanna put mine? And then there's other tools that you can use that allow you to really search what other products and services are being used in certain markets. But in the startup realm, there's probably not a lot of things out there, right? So how you know if you have traction, or how do you know if you have a market, is really depending on what your users are saying, right? Are they subscribing to your let's say your app or your service? But how long are they staying, right? Are they subscribing for 30 days and after 30 days, they're deleting the app from their phone? Like, there's a lot of signals you can say around what is my users telling me? What's the data telling me? If you have a subscription model, right? How long is that subscription? If you have certain, I would say CPG tools like e-commerce tools, they actually have metrics built into tools now that can tell you, like, what's your average cost per user, how much one user is spending with you, how long they've been with you. A lot of those metrics and those details around a lot of these new e-commerce platforms, if you're an e-commerce business, can actually tell you some of those metrics. So in short, I think those are some of the things that can give you hints around, like, if you have some traction or if you have a market. But I would say the biggest thing is just ask your customers. Like, never stop talking to your market, and whatever that way that is. If it's surveys, if it's guerrilla marketing, you're on the streets and you're handing out flyers, or whatever you're doing, never stop talking to your audience.
You mentioned product market fit, and that comes up. It doesn't matter if it's your first startup or your 50th. It comes up in investor conversations, and it's a popular term, but I feel like there's a lot of confusion around what that means. Can you really quickly give us an example of product market fit, or how they might be able to discover what that is for their startup?
Yeah, so oftentimes what I hear when startups come to pitch is, like, we found product market fit. But when I actually dive into their business, what they're really saying is that they've really they found some early adopters, right? So when you first launch a company, who are the first people that are typically going to support your business, right? Friends, families, and fools, right? These three people, like friends, families, and fools, right? They're going to support your business. But after that kind of hype and that wave and that kind of feeling of this is new starts to phase out, right? Who's that person that actually needs your product, right? How many of you all get mad or frustrated sometimes because your family and friends aren't sharing your business? They're not patroning your business. My man, he raised his hand quick. Right. You used to, right? But you figured out that is probably because the strangers are actually your customers, not your grandma, your auntie, your cousins. They'll purchase your business that first time, but after that, you want to find the strangers, the people you have never been in contact with. People. Those are the people that are going to give you the reviews. I love your business. I love what you're doing, right? And so in its simplest form, that's how you know you found, like, product market fit. When people are coming to you without the cost of you going to get them. So I'm not going to throw another acronym out there like CAC, customer acquisition cost, but if it costs you less to get a user, let's say you're getting users by referrals or by word of mouth, and it costs you nothing to acquire that user, that's how you know you're starting to get traction, right? Because you're not paying to get that customer. They're coming to you, and you're not having to spend money to get that customer.
I don't mind the acronyms. We just gotta explain them. We gotta spell it out, because there's a lot. And I know, again, if it's your first company, or again your 50th, there's a new phrase that comes out, I feel like, every week that I gotta Google. I spend a lot of time Googling them.
I'll say one thing on
Please.
On the resource piece. Obviously, there's a lot of things that are out there that you can really take advantage of, but there is a group called SCORE. Retired executives, they really kind of help give guidance. So I would highly recommend that you guys, really take advantage of that. The Black, Chamber, reach out, and look at those resources. Universities, I mean, there are programs where they give you free training on how to look at your business model, marketing strategies, and things of that nature. So just hone in on the things that are accessible to you. I don't know, but by show of hands, are you all familiar with a company called Black Wall Street? Okay, so Mandy Bowman, fantastic founder. She has a really unique proposition that she offers to her business customers. So when you do business with her, or you coming into her platform, they offer free legal services. So, essentially, if you're trying to figure out how to get set up, they have people that can literally walk you through that process. So leverage that. So.
Often after the idea phase comes, oh, okay, where do I get the money from, or maybe I've made my first dollar, where do I go? So Chris, I would love to know your recommendations. Let's say the first dollars come through whatever we're selling. Let's make something up. A hat. We'll go back to the hats. I've sold my first hat. Now what do I do? Can I run this out of my personal business account? Should I look to local banks to start my first, how early is too early to start looking at business bank accounts?
Yeah, so I think it's never too early. I think if you are in a process where you're trying to start a business and you're trying to get your bank account set up, obviously make sure you have your entity, your LLC, S Corp, C Corp, based on how you're going to operate the company. Once you have that structure in place, do get a business account. I think the misconception that a lot of founders do, and I think if I had to my younger self, if I had to do it all over again, is don't take out personal credit card debt to start your company. If you have good credit, leverage that good credit to have a track record from your business side. Go get a business credit card. You can start establishing, good paying history. You can start showing that you're paying your bills on time, and that doesn't necessarily ding you on your personal credit. So you don't, if you have a 750, 800 credit score, you can keep that credit score, but then on your business side, you're building that credit for that piece. So a lot of people don't really know that. So I know, like with Frost, we look at, PG, which is personal guarantee. So if you're going to get that ding on a personal credit card, why not just go ahead and just start your business, that way? That's just really more efficient. I say that's one key component. Another component is a gas card. People don't think that, with inflation and gas prices being as high as they are, get a business, gas card. You got to drive somewhere, right? You got to network. All those things, kind of play hand in hand. So, those are just smart ways that you can make moves. And, as you're trying to start your company, you can kind of build credibility, with your company. But find a bank, one that you can trust. A lot of banks, obviously, they talk a big game in terms of, hey, we're about customer experience and all those things. But, one of the things that really resonates with me and Frost is, we really are customer centric. We do business with people. So we want to really understand, what are your goals? What are you passionate about, and how can we get you there? So always make certain when I literally say interview the bank, see where it's a good fit. Are they going to support you from the beginning? Are they going to give you the financial advice that you need where you can set yourself up for success?
That's great. It's funny, every time someone gives a great response, I'm like, hold on a second, you mentioned entity, set up an entity, and I'm putting myself in my first business shoes, like however many years ago it's been now, I'd be like, whoa, entity, hold on, I don't know what that is, and I don't know where to go with it. So I'm gonna bring this to start over here on this side is, okay, we've got a great idea, now what do I need to do to formalize it? And I'm sure that's a frequently asked question here at Redbird or the deck, and probably to you, BJ, about, what do I do? So what are some different resources people can look for to figure out how to set up an LLC or determine what type of corporation to start if they've got a solid business idea?
Yeah, so I'm going to reference one of our outreach collaboratives that we're a part of. So it's called the SBA Community Navigator program. So we are a part of 6 different organizations. It's a group of CDFIs, business service organizations, and even some nonprofits. So hold on one second. We have this QR code. It's over there, but you'll be connected to one of these 6 organizations, and they offer an array of different resources, right? So whether it's business coaching, access to capital, but these individuals, they are great when it comes to formalizing your business. So, if you need help getting an LLC, because there are some businesses that are slightly predatory, right? They're going to charge you to create the LLC, the EIN. And even today, when I was out in West Dallas, I heard a business owner talking about, I got charged $200 to get my EIN, whereas as y'all know, right, you can, exactly, right? So that's the thing, right? Just like being aware of these different things, connecting through either a community navigator program, one of our partners up here, right, to just be aware of these things.
Yeah. It's scary out there. People will prey on people. You said $200 for an EIN?
200.
Should have been free 99, but yeah, that's good. And if you're a first-time business owner or you've got a great idea, there are unfortunately people who do prey on people in that space. And if you register for certain websites, they'll sell your information other places. So always just be aware of who's emailing you. Double check for spam. Make sure not to give your information out. It sounds common sense, but I watch entrepreneurs get suckered into some unique situations that it's tough to get out of. So just use common sense and always ask your peers. One thing that I know businesses struggle with is, okay, I've made some money, but I'm falling into debt here. I want to grow. I want to raise money. Where do I start? BJ, we've known each other a long time. We've watched you help a lot of companies generate their first few dollars of capital into their businesses. If someone were here excited about raising money, could you talk about the different opportunities for companies to raise and maybe what Impact Ventures focuses on?
Yeah, to the earlier point I made about knowing what kind of business model you have, right, and what's your long-term goal with the business can dictate what type of capital you should be looking for. Like at some point in the trajectory, you should be looking for institutional capital, i.e. a bank loan, or a CDFI partner, right, or alternative lender like ourselves, or friends and family. And so it really depends on where you are in the stage and what you're raising capital for. And I'll do an example of like when you should pursue debt, right? If you have a business that doesn't, let's say you don't have a business model yet, meaning you don't have revenue generating, or if you're generating less revenue than you're spending, then you probably don't have a sufficient enough model to take on any type of debt, right? But there are flexible types of debt out there. You've probably heard the term revenue-based financing out there, or royalty financing, where they take a percentage of your revenue. There's more flexible debt products out there that are growing, actually more in the ecosystem, that provide entrepreneurs a better terms that are more friendly for the term. So instead of paying a fixed payment back to a term loan, you're paying a percentage of your revenue, right? And it might be a small percentage, maybe 5%, 6%, 7% of your revenue on a monthly basis. So this is looking at your monthly cash flow statement and saying, how much debt service do you have? That's what a bank is going to look at. That's what any lender is going to look at, right? And so, we're talking about debt, like equity, right? When do you take on equity? I see a lot of entrepreneurs getting caught up in the headlines of TechCrunch and all these magazines of raising venture capital, but if you have no plans to sell your business, you should not be pursuing venture capital. You should not be setting up investor meetings, asking people for, hey, can you invest in my business, if you don't have a goal of setting your company, because that's the only way that investor is going to get paid back, right? So I often see entrepreneurs go down that path, and they spent 6-9 months chasing angel investors and VC funds, and then they get in the meeting, they say, well, I don't plan to sell my business. I've actually had that happen. I was like, well, what are we doing on this call? If you don't plan to sell your business, that's the only way I could get paid, right? And then looking at alternative types of capital, really it's just understanding how much risk are you willing to take in your business, right? In terms of the capital that you're generating from your income. I mean, it's really like blocking and tackling, and that's where I'm trying to keep it. It's really blocking and tackling. Like, how much are you making? How much are you spending, right? And do you have enough room to afford taking on any other type of capital that you have paid back? And that's just the simplest form as it gets, is blocking and tackling. So, yeah, I would start there.
Yeah.
One thing I'll add, you made a good point. VC is not for everybody. Angel investing, friends and family, the same. But I think in hindsight, if you can find product market fit or find people that want your product, just go sell. Because if you got revenue, then you know what, you might not even need a VC or an angel investor, because then your numbers basically show for themselves. So then you keep controlling interests of your company, versus if you go the VC route, which, he made a good point. If you're trying to scale fast, and you're trying to be 100 million, maybe $1 billion type company, then VC is the right fit. But if you're not, then you can grow your business organically and still have a nice nest egg and still be a multimillionaire or whatever your goals might be. So don't ever get caught in trappings of, do I need to go down the VC or angel lane? If you got sales, just keep growing. And when you keep growing, they'll come to you. And then you can have better terms of negotiating versus giving up a majority of your company.
I want to go back to your story that you were sharing about the company that you started to build a product like a grooming product. I feel like there's a lot that goes into packaging and branding and formulas. How did you fund that first kind of stage of the business? What route did you go?
Yeah, so I was talking to, what's your name? Talking to Seth about just the process that I went through. Obviously, my situation was a little unique. I played college ball, was NFL free agent for the 49ers, tore my PCL. So I had a little nest egg, plus my business partner was an NFL player. So we had capital that we could actually put into the business. Obviously, everybody's not fortunate enough to do that. So for us, at the time, we thought, hey, we're going to just build this thing really fast and grow really quickly. But as I said, you can grow real fast, you can crash and burn. So, you have to be very methodical in terms of, how you pace yourself and how you, look at your business model and in terms of how you need to, scale your company up. But there's a lot that goes into, packaging, raw materials, marketing. If you're fortunate enough to get into a big box, is that going to be the right fit? Because, shelf space is very expensive. So you got to pay marketing people to market your stuff because they're not going to market it for you. So there's a lot of things, a lot of moving parts that go with it. But, hindsight, I think, start small, and then you can always go big. And that's the advice that I would give, if I had to do it all over again. Lessons learned, I think that's what entrepreneurship teaches you. It's trial and error. And, failure is not a bad thing. It's just more lessons and things that you learn over time. But the key is you want to make certain that you don't go back and do it again. Make certain that once you make that mistake, you fix it, you rectify it, and you go on and, you continue to build.
Yeah. I think one of the best things about building a business in this year and this day and age is access to technology and resources online. I feel like you can learn pretty much everything on YouTube these days, and so I always encourage people who have a business concept, like, go learn the lessons of others, like listen to the challenges that they've run into, and there's so much you can learn out there, and learning to not listening to someone else make a mistake is a lot cheaper than making your own. So there's so many resources available for that. I wanted to talk about accelerator programs. There are a lot of people who ask questions about, well, should I join an incubator or an accelerator? And you're often asked to give up a percentage of equity in your business. How can, what accelerators are available to people here in Dallas or maybe virtually that you know of? And how to determine if it's a good fit for you? Do you have any?
Yeah, so when we're speaking about the deck, we have multiple accelerator programs. So each accelerator program...
Oh, wait, hold on. Let's give, what is an accelerator first?
Yeah, so accelerators, it's going to vary in time commitment, but typically, if we're talking about impact ventures, I know like you're going to have to commit 3 to 4 hours a week, maybe even more, right? But it's very intense, whereas our accelerators, we're targeting more entrepreneurs in the ideation phase, right? So we want to make sure you can get from an idea to a market validated business. So they're typically 7 to 8 weeks. We're going to have maybe, again, 2 hours talking about like curriculum, and then you'll have some mentor office hours sprinkled in, pre-work and assignments as well. Then our other accelerator is for businesses. They're 1 to 2 years in operation. They're looking to scale. Maybe they're wanting to hire a team member, and they want to figure out, okay, how can I either raise money to hire my team, or should I be raising more revenue and then hire a team member? We also have an accelerator program that's just focused on female entrepreneurs. So I know we're going to have that in October as well as 2023. So please be on the lookout for that.
Any advice, BJ?
Yeah, I think so in DFW, there's a ton of accelerators, which is great. Like every ecosystem needs a lot of programs, but I think the key is understanding like what is the best program for you and what fits for you. Oftentimes you get entrepreneurs that come out of certain programs and they're like, oh, that program sucked. They didn't do this and they didn't do that. They didn't do this for me. It was a bad experience. Like oftentimes it's because that founder didn't do enough research to know that that particular program was not the best fit for them. So my advice is to do your own homework on the programs and what the services that they offer, and make sure that the resources and services they offer fit the stage that you're at, right? And so as she talked about, different accelerators have different stages. They also have different industry focuses. So if you are a CPG company, consumer product good company, there's SKU, there's programs like that out there. If you are a health tech company, there's Health Wildcatters, there's Tech Wildcatters. Specifically with Impact Ventures, our program is really focused on 3 different types of businesses. So if you are a technology or tech-enabled startup company, if you are consumer product, consumer goods, so let's say you have a beauty product, or let's say you have a food product that you're looking to get into big box retailers, those are the types of companies we focus on. And then scalable ventures that are looking to do business with government agencies. So your contractors, we have one company in our program now called Imperial Floors, which you would not think that this market exists, but there are tons of people out there that buy custom dance floors, right? High-end market, right? They're paying, $100,000 for, per customer, plus per customer, but believe it or not, there's an industry for that.
Do they light up, or like what a dance?
So think about like quinceañeras, think about weddings.
We do
they're
like
like
to party.
custom dance floors with the husband and wife's faces in the floors, lights up floor. Yeah, like he does it all custom, literally. Those are the 3 types of business models. Also, you have to be in business at least 2 years to qualify for our program, and also have to have at least a minimum of $50K to $250K in revenue, right? And so every accelerator is going to have some of the same frameworks that Alexis mentioned: education, mentorship, maybe some capital. Nowadays, I feel like if the program doesn't have capital, I wouldn't pursue it, because nowadays it's I just feel like entrepreneurs of color are over-mentored and undercapitalized, and it's if I'm going to learn and sit somewhere for 12 weeks, I want a check at the end of the day to come with that. So the capital piece is crucial as well, even if it's a small grant or something for my time and being a part of it. But yeah, there's a lot of programs, so I just say do your research on what really aligns with you. The reason we say that we want 2 years in business, at least $50K to $150 in revenue, because the resources that we provide in terms of mentorship, education, it is at that 201, 301 level. So the mentors that you're going to work with, it's going to be the ex-CFO at TGI Fridays. It's going to be the the chief marketing officer at what's the company up in Plano?
One company.
The tech company that went
give us
public.
something else.
That just went public. Alchemy.
Oh,
yeah, you're right. So I'm saying that to say these are very high-level people that have very limited time, and so they're going to be looking for results out of you, right? So it is I know, Amber, it is a very no-nonsense, because that's what it is if you're going to be an entrepreneur. It's not something that you can play around with. You can, but you're going to waste a lot of time, a lot of money, right? And so you really have to be dedicated to your craft and what you're building. And I'd say the benefit of being in any accelerator is that at the end of the day, you should have more knowledge than you came in with, right? You should have a larger social network or professional network that you came in with. Those 2 things along, and you should have a sense of community with your peers that you're learning with. Those 3 things alone are the essential things that entrepreneurs really need to grow. And so if you're getting that out of an accelerator program, I feel like you're winning. So
Yeah. Go ahead.
And another thing too, definitely check out dallasbuilds.org, because you can filter by either resources. So when it talks about accelerators, they're going to have a list of different organizations that have them. And as Ben said, definitely check out and see if it's a right fit for you. And as I pointed earlier at the desk over there, I believe we have a little handout that has a few of the accelerators on there, like Accelerate Her, but definitely check out dallasbuilds.org.
And I'll say a lot of our organizations that she mentioned, we all work together. So when you go through her program and you graduate, eventually you come around to us. So it's kind of like this stair ladder to step you to get to the next level. So just know that if you don't qualify for our program or any other program, as you continue to grow, eventually you're going to get to where you need to be. And that to me is a healthy ecosystem when you have programs and services that can support entrepreneurs at the stage and time that they're at. So.
I think there's certainly phases to it and stages. My company, nVenue, went through Impact Ventures, and the biggest, I think, element that you helped the team. It was before I joined the team, but was just getting that message and perfecting a pitch, and like the purpose that you served was so powerful that we were able to get into a sports tech accelerator with NBC and Comcast, which was massive, put us on TV for the first time, and we just raised $4.5 million. But it all started with getting resources and getting that message right, and the vision, and practicing with the team. It was a small team at the time, and I think it was the first time you had gone totally remote, right? All virtual. But
it was her whole business model that shifted actually when she came into the program.
And that's okay too. I think that's something that I hear entrepreneurs nervous about making a pivot or a change. But successful companies, if you look back in time, I mean, look at Amazon sold books. I mean, if you look back at some of the companies, they really honed in on what they were great at or evolved entirely to make it. So thanks for your support of entrepreneurs. But I do want to talk about something that comes up really frequently when we're working to start a business or a startup, and it's not necessarily about money, but it can be very expensive if it doesn't go well. But I want to talk about team and co-founders and bringing people in to help you. I know a lot of people have friends and family who reach out and say, "Hey, let me help you." But I want some of your best recommendations maybe on how to build a team or how to navigate things as a solopreneur, because I know a lot of people in here probably are starting on their own. Any recommendations?
Yeah. So a few things. I feel like one, it's important just if you're looking to either have your family or friends help you out with the business, just again, think of those boundaries, and also it might sometimes get a little bit messy. But also, when you do mature in your business, just make sure that you are charging what you're worth and don't undervalue your expertise or what you bring, because that's what I'm finding with a lot of founders. Doesn't matter if they're in ideation or if they're more seasoned, they aren't charging a competitive rate. So keeping that in mind, especially if you have friends and family are like, "Oh, I want to use your service," and I get at a certain point, right, it's free, but also being mindful, like, hey, you have to charge them at a certain point.
BJ, any recommendations for teams or solopreneurs?
Trying to figure out where to start, but
you're like, how much time do we have?
Team is everything, man. Like literally, at the early stage, the idea. People always talk about, I need to protect my idea. I need to sign this NDA. People are not going to steal your idea, right? At the end of the day, and don't ask an investor to sign an NDA, because that will make you look very novice. But I will say that, you guys heard the statement before that ideas are a dime a dozen, right? But it's about the execution, right? And often what I find with solo founders in particular is, this is going to sound harsh if I say the lack of self-awareness, right? But there has to be enough time spent with yourself to know what it is that you do well, right? And what do you love to do, and what do you need to outsource to either a co-founder or to another team member or something like that. At the beginning of our program, and I don't know if I did this with y'all, but I tell our founders to close their eyes and imagine they're a $10 million business today, right? Close your eyes. What is your role as a CEO? It looks very different at 0 revenue or 100,000 revenue than it does at 10 million, right? At 10 million, your job is to manage, inspire, and lead. That's it. As a CEO, right? But when you're a startup business, you're the accountant, you're the marketer, you're the financial, you're the CFO, you're the packer. Your kids is probably the packer too. They should.
That's why you had the two, right? To package
right.
things up. Yeah.
Right. You're wearing all the hats, right? And so you really have to understand. You have to do some self-reflection and really understand what are your skills, what are you good at. Some of those things that can help is Strength Finders 2.0 is a great exercise you can do. I think it costs like $20 to take the test, but it'll tell you kind of where your strengths are. And then also, I do it with my team. I have my team actually do it as well. So the concept of Strength Finders is to say that growing up, and this is just like in grade school, they would tell you that focus on your weaknesses, right? So if I'm good at math and I'm not good at science, I need to focus on science so science can like come up. That's actually not really the best thing in business, right? The best thing in business is like focus on the thing that you're like an A+ student in and outsource the other thing, right? So don't find a co-founder that has the same personality as you, because y'all can butt heads, like interpersonal skills, right? Don't find a co-founder that has the same skill sets as you in terms of how they solve problems, and strength finders can tell you how you actually solve problems. Are you a thinker? Are you a doer? Are you a relationship person? It can tell you some of those things and how you show up with other people. But it also overall, just to make it short, is really being intentional about what you need. And a lot of times that takes an entrepreneur to slow down, and sometimes that's impossible because the business is going, it's running. You done already launched the campaign on social media. People are coming at you like, and you're trying to fulfill orders, but you don't have time to slow down. Because oftentimes you'll find that when you move too fast, you make a bad hire. And when you make a bad hire, it costs more than money. To make the bad hire, it costs you more than money, right? It costs you your mental health, your mental peace, your gut. Everything is just off kilter when you have a bad hire. So I would say think long-term about what you need and prioritize where are the needs, and prioritize things that move the business forward, right? There's this thing called Vanity Metrics, right? You know what Vanity Metrics are? Likes on Facebook, subscriptions, that's a good sign. Social media, you pop in social media, so my business, but you're not making the money, like. So focus on the things that move the business forward, right? So like, do you need, if you're, I'm assuming some of you are in the product industry or e-commerce, right? The next hire you should have as an e-commerce person is either an account manager or someone that's gonna pack the bag so you can sell, right? Because every business has three things: someone who maintains the business, the person who sets the vision is moving the business forward, and someone to market the business. Those are the three components that you need, right? And so if you're a builder and you're a maintainer, you need to find a marketer, right? Because while you're looking down, who's marketing, who's setting the vision, right? So think about those three elements. I know she's gonna ask questions. She's trying to get a question in, but towards the end, I think she's holding questions. I'm sorry. But I would think about those three elements: who's building, who's marketing, who's maintaining, who's marketing, and who's building, right? The builder is the person, the visionary, the person that's moving the business forward. And so oftentimes I see people prioritize, I need a marketing person. You don't need a marketing person yet. Marketing is free. You can automate marketing. Go to Zoho and find the little Zoho.com and go to the little marketing thing, and you can automate social media posts. Like, you don't need a person for that. So think about those things that are actually gonna move the business forward, and move the business forward is traction, sales, right? It's partnerships, it's contracts. Those are the things that move the business forward. Yeah, collaborations. Those are things that move the business forward.
And the one thing I did want to add with marketing too, so there's a resource that you can get a meta rep, so you can have someone from Facebook and Instagram, work with your business for free and let you know when the algorithm changes, so you can, edit your posts to fit that, but also making sure you're able to, get your product or service to the right audiences. And
Okay, how do I find that? Because that's the hardest thing. Seriously, how do you get part of that program? Because they are the hardest people to get in touch with.
Yeah, so I recently found out Meta Reps, they have their own specific number just to, help business owners. So it's different than the regular customer service number, because that's just a whole nother thing. They're not going to reach out. So I think I have that on my phone.
That's okay. We'll talk after.
Yeah. Okay.
Yeah. It's okay.
Reach out to me.
It's the hardest thing. Chris, I wanted to end with a question down here. Let's assume our business is going really well. We're making money. What are some things to be on the lookout for? What could we invest in? Are there any growth hacks for startups when it comes to banking? Are there any unique opportunities for loans or exciting things that Frost might offer, or any resources that you know about that you would share?
In terms of if the company's growing?
Mm-hmm.
Well, I think if you're at that stage where the company's growing, you're looking at how you can really kind of take it to the next level. That's where you can have established a line of credit. It could be, permanent financing. There might be acquisition where, you might acquire another company to kind of propel your business. So there's ways that you can look at, really scaling your business up. In terms of growth hacks, I don't know if that will really center around banking. I mean, BJ, you might be on the VC side, but I think for us, we look at it from a global cash flow perspective. So, if the company is making, revenue, then we can, do a lot of things. We can be very creative. I think that's one of the unique things about Frost. We are the leader when it comes to being kind of a regional type bank. Obviously, you have your big, large global banks, but we can do the same thing. but we tend to, look at the deal based on the individual, and we can, structure things, maybe thinking outside the box. So it just depends on where the company's going, what your goals are, what you're looking to do, and then we can kind of assess, from there, what makes sense to put you in the right product.
Did you learn a lot about companies? I think a lot of people benefited from the PPP loans and some of the SBA work that was done out there. Any lessons learned or anything you would encourage startups to do now in the instance we might run into a pickle like that in the future?
Lord, PPP was crazy.
Yeah.
Yeah, I think everybody, it was a rat race. Everybody was just trying to get the money before it ran out. If you were the fortunate one, God bless you. But it was a lot to navigate. I really honestly during that time it was very challenging for a lot of companies, and just everybody just from a mental health standpoint. The world completely was shut down. I mean, that's just unreal to me when you think about it. But I think as you move forward, now the economy is moving in a really weird way. With the inflation, prices are up. I think right now you just got to be very smart about how you spend your money. I think really looking at do you need to increase your prices? Do you need to make certain that in terms of if you do have employees, do you need to retain those individuals based on costs and things going up? So you just need to do a financial assessment of your company and just kind of see where do I need to make cuts? Where do I need to be lean? So you can kind of get over the hump during these times, and then obviously once we get over the hump, then everything just kind of skyrockets back again.
I think that whole process taught a lot of startups. I'm on a bunch of forums and groups on Facebook, and I just watched people absolutely panic about getting their finances and their accounting together, because the people that benefited from the PPP loans and what was available were the ones that were ready to apply for it. Like if you're scrambling at the end to get your business together and your financials together and pull together tax documents, you might miss out on some of those opportunities. And I watched a lot of people suffer for that reason because they just weren't ready to even ask for the help. So all the more reason to be at an event like this to get prepared and set the tone for the future. But
I was going to make a point to what he was saying about like right now, the times that we're living in. If you are an entrepreneur that is selling a product or service, now is the best time to raise your price, right? I'm not saying everyone can default to say inflation, but it is the thing right now. Like inflation is a real thing, right? Supply chain is increasing in terms of costs, right? Cost of goods do go up. If you are a food business, the cost of eggs are not the same, right? So right now is the best time to raise your prices, but also think about what are some creative ways you can continue to retain your customers by offering some flash sales every now and then, right? So as you increase your prices, okay, you could do a 15% off. That's going to drop your prices back to where they were when you originally started. So you're not losing by doing a flash sale. What you're doing is you're retaining your customer, and you're thinking about your customer and increasing that customer experience. So I would say right now is the best time to raise your prices, offer a few flash discounts, and then back to just to get them into what you're selling. I don't know what all your businesses are, but I'd say that right now is the best time to raise your prices.
That's great.
Does anybody? Let's get a quick question. Does anybody use any kind of accounting software, QuickBooks or? Okay, so the majority. Okay, that's good. So it's always good to look at trends, to kind of get ahead of where the market's going, because then you can anticipate, if you're going to have purchases, increasing prices and things of that nature. So always, on a regular basis, look at that income statement, look at your, balance sheet, look at, cash flow, see where the money's coming at, see where you need to, look at other, revenue options. Even from a forecasting standpoint, that's going to tell you very quickly, where you need to really be anticipating, maybe shortfalls, or, you might need to get a line of credit, you might need to do, various things. So just always stay in tune. I mean, everything when it's going great, it's a nice ride, but then when the bottom falls, you don't want to be scrambling.
Totally. Well, let's end on one round of applause for our panelists here. We'll do some questions. Before we switch to questions, because I know it's going to get hectic after we close out, but tell us how to get in touch with you or what URL to land on when we're looking for more information.
Yeah, so if y'all want to get in touch, my email is alexis@thedeck.co. So please feel free to reach out to me via email, and if I'm not able to serve y'all or help y'all, I will definitely connect you to another person or organization that's a better fit for y'all. And also check out our website as well to stay up to date, and of course dallasbuilds.org to stay up to date with all of the Dallas business ecosystem.
Yeah, you can find us on all social media, Instagram, Twitter, all that, at Impact Ventures Co. CO. Our website is impact-ventures.co. And you can reach out to myself or our Rockstar team that can help you all get the services you need. We just started our 6th cohort 3 weeks ago, so we're in week 3 now, but we have a rolling application. So every month on I believe the 3rd Wednesday, we have an info session. So if you want to learn more details about the program, also about the fund, we have an info session where you can learn about that. I think we just had one yesterday, so the next one will be in October for our info session. You can find that on our website to sign up for the next info session.
Yeah, you can reach out to me anytime. I mean, as you guys know, as an entrepreneur, you're working 24/7. You never can cut it off. But you can email me at christopher.butler@frostbank.com. If you want to email me about any questions or just want to bounce an idea, I'm happy to help, give advice, any way that I can do from that standpoint. From a Frost perspective, we not only do commercial banking, we obviously do the personal side, insurance, investing. How are you protecting your staff? How are you protecting yourself? Those are things that we can talk to you about. So if we can be a resource, please let us know.
Awesome. We had a question. Thank you for my first hand up back there. Do you want to ask a question? Covered it? Okay. Who's got a question? Oh.
Sure.
What would I do next? Would it be what would I do next? Would it be hiring somebody to reach out or pop-ups, or I don't know what to do next?
The answer, I would need more information to give you a solid answer, but I would say you're off to a good start of at least getting out there in the market, right?
Because I was thinking maybe because Black Friday, I would try to start marketing like in November or something.
Yeah.
I'm not.
Yeah, I mean, you have inventory. You say you have inventory.
I have everything.
There's a market, right? So now it's just how do you want to attack the market? How do you want to be in the market, right? You can just go all out, or you can start slow and do pop-ups. You can go to daycares, places where kids are. You can go to churches, et cetera, to find where your customers are gonna be. But that just depends on how fast you want to grow. I don't know how much capital you have on hand to spend. It's a lot of unknown things to give you kind of a solid answer on what to do next.
Okay, thank you.
Yeah. Or you go.
That's okay. Green here.
I'm loud. Oh, okay. Hi, thank you everyone for speaking. Thank you everyone for speaking. I'm Maxie Taylor. I had a question about once you become a full-time entrepreneur, insurance. Nobody knows where to point me to. Nobody knows what resources are available. And as an entrepreneur, I can't really pay that whole $1,000 a month situation that they want. So do you guys know any resources for full-time entrepreneurs? Because we're not getting insurance through our employers anymore.
Is this health insurance?
Health insurance.
Oh, okay.
Oh, okay. I was going to ask what kind of insurance.
No, not business insurance. My
I was
bad.
like, are you using any type of? Are you using QuickBooks or any type of accounting? Okay, you don't use QuickBooks. Okay. Yeah. So if you have a QuickBooks platform, they integrate your insurance plans into that. Healthcare plans. Yeah. So they have a partnership called Simply Insured, and so you can actually sign up yourself and your employees through that. The biggest thing is just knowing all the details of your insurance. I mean, there's a lot of small businesses out there. I can point you to a couple that I know are in my email right now that service small businesses. A lot of chambers of commerce have small insurance companies that provide small business for insurance for small businesses. Look into some of those if you're looking for health insurance. Be careful though, because some of them will require that you have at least 2 FTEs before you can sign up as a plan.
Which are
Okay, yeah, I was like, yeah, he
Full-time
cleared it up.
employees.
Thank you.
Yeah. That you.
Solopreneur.
Right. So make sure you find a plan that's flexible enough to just take you as a solo, right, as a solo plan, because some of them will require that you have at least 2 full-time employees before you can even sign up with their plan. Yeah.
It's tough though. That's a good question. Look into HSAs as well. HSA, the health savings account.
I'm gonna let's see why I pick who next. I ain't dealing with this.
Oh, right here. Right here.
I just passed the mic.
Don't be scared, KJ. I'm nervous.
Yeah, definitely appreciate all y'all for speaking today. It's been amazing. My name is Javian Hodges, and my question is, I guess, like, what's the biggest question you guys feel like most founders aren't asking when it comes to scaling their business from that 6 to 7 figure mark specifically?
What question entrepreneurs are not asking?
I'll say one thing that a lot of entrepreneurs make a mistake on is, when you have your business address, you use your home address. Don't do that. Get it. Yeah. Yeah, get a virtual office or virtual address that you can use. It just legitimizes your company to make it look real. It kind of eggs me a little bit when you see people, and I've done it before, when you have a Gmail, it'll say Chris@Gmail. That's not a business. So if you have a bakery or auto shop, it should be Chris@autoshop.com. So then it's your company name. So when you're reaching out to people and you tell them about who you are, what you do, then you'll more than likely get feedback. So those are just some of the mistakes that I see sometimes that entrepreneurs make. So just be mindful of that.
You got anything?
I would say what I'm not hearing a lot is, especially from CEOs, is what kind of culture do they want to build within their organization. There's a saying that culture eats strategy for breakfast, if you've ever heard that. What that means is that you could set a plan and a strategy all day, but if you don't have the right culture to execute that plan will never take shape. And when you're talking about scaling, the challenge the challenge around scaling, right? We're not talking about going from like 0 to 1 employee, but like going from 10 employees to 25 or to 100, is that you start to lose touch as a CEO. Like, you don't know what's going on in this department. You're expecting that this person is going to operate like you trained them. The only thing that keeps people in check in terms of execution and how they show up to work is core values, is company culture, right? Like, it's not sometimes it may seem like a gimmick that you see a lot of CEOs are like big personalities, or like they talk about values, they talk about diversity, like they talk about integrity and things like that. The core values are the things that are going to allow your team and your departments to operate in a way that you want them to without you being there, right? So when you leave the room, everybody relaxes and so the core values on what it means to be a part of whatever organization, XYZ organization, setting those strong mission, vision, and core values as a CEO and reminding your team of that constantly, then you don't run into a lot of the interpersonal things, because once you get 10 to 20 employees, all it takes is one water cooler conversation for you to have to call in the HR person because so-and-so is disgruntled because so-and-so's tone, and like it's just a whole different set of problems when you got 10 to 20 employees up to 100 employees versus when you're first starting out and it's just you and maybe 2 other people. So that's a question that I don't hear a lot, is like, what culture do you want to bring in your organization? Is it like a work culture? Is it friendly to parents, who have to deal with, children and all that? Is it inclusive to where everyone's voice is being heard? Because that's hard to do when you got 100 people in the culture, right? So that's what I see, and sometimes that culture will guide the strategy, right?
One thing is that I've heard startups struggle with is once they hit a certain point, they're like, well, how do I pay myself? Is it time to pay myself? I don't know. And looking at what type of entity, if it's a C Corp or an S Corp or wherever you're at tax-wise, very important once you get to those big figures. So important to think about early before you get to the point where you're scrambling and trying to figure that out.
CDFIs are community development financial institutions. It's an acronym for CDFI, and these are entities that provide loans and services, I would say for, I hate to say risky, but for a more risky clientele. So they might look at their underwriting policies might be a lower credit score that they'll allow. That might be in exchange for a lower interest rate or a higher interest rate depending on where you are, but essentially banks work in partnership with CDFIs because sometimes where institutional banks can't lend because whatever their underwriting requirements are, they'll rely on CDFI partners that can come in and fill where there's gaps, right? And so that gap might be, you talked about personal guarantee, right, or personal PG, I think is what you mentioned. So what that means is if you're going to get a loan from a traditional bank, they're going to require some type of owner injection. So you have to put money into the deal for you to be qualified, right? Or they might say, what asset do you have to be able to secure or back this loan that we're going to give you? Well, if you don't have an asset of the value 100%, this CDFI might say, hey, we'll back you at 80% of the value of that asset, right? Versus another institution might want 100% of the asset of value. So it really differs. It differs based on what bank you're working with and what CDFI you're working with. Essentially, the CDFIs were created to provide loans and small business loans and also mortgages because CDFIs are in that space as well for minority communities. So you should all get to know who your CDFIs are and what stage and what range they invest in, right? So here in Dallas-Fort Worth, you have Dream Spring, you have Lift Fund, you have People Fund, you have BCL Texas, now you have True Fund, you have us who's pursuing our CDFI. Who else am I missing? I said People Fund. Now you got Lendistry that just came in. These are all CDFIs here in the DFW area, but they all lend at different stages, right? Your Lift Fund, I think I always get those two confused. They're going to do more micro loans, so anything kind of like below $25,000. BCL Texas is going to be $50,000 to $250,000, kind of in that higher range. So really just know what the average check size for each CDFI and where you fit.
I just want to add to that. If you don't know those individuals at that, like People Fund or Lift Fund, you can reach out to us. We can help you make that introduction.
We'll also send out a list of resources of different CDFIs as well as a list of business bankers you guys can ask questions with as well for everybody who registered to attend.
KG, my girl right here had a question.
Hi. So on the subject of capital, right? So you have a small growing business, right? You have a line of credit, or you can do those alternative revenues like through Square, Shopify, right? But those things take percentages daily, right? And then you go to a bank, and now the bank is saying you have these constant, debits out your account. How do you suggest we get out of that loophole trying to scale? Because you take it, you buy more inventory, now you're, getting these daily things. That's kind of where I'm at with my business scaling, but I can't get a bank loan.
Yeah, so I think in those type situations, you need to probably increase revenues. You can refinance the debt. I think there's the options that you can look at. I mean, I will be aware of these shark loans that are out there because they do take a high percentage of your revenues, and it's literally a slippery slope. So it's really hard to recover. But you probably just need to just look at the whole financials and just kind of see, maybe there's some areas where you can maybe restructure some things. And I'm happy to, look at, your financials or just sit down with you and just kind of see, where you maybe can, cover that. What does your company do, if you don't mind me asking? Women fashion. Okay. So you doing this through Cash App? Shopify? Okay. Yeah, let's just offline, we can schedule some time and just look at what you have. But a lot of times, when you get into those type deals, just be very rare because they're easy to give you the money, but once you get that money, it's game over. Yeah.
Is there an expiration date with the deal that you have with them, or is it like a mandatory opt-in or?
No, so it's like daily, right? So you have a great sales day, just say you make $5,000-$6,000 in a day. But then what's different from a bank loan? The bank loan is like monthly. So all your capital is taken back daily.
Right, they're taking daily out, yeah.
Daily, yes. Which now you can buy more inventory, right? Because your capital is tied up.
Now, the capital that's tied up, is it because you took out a loan from them?
Well, they give you like Square, whatever. It's no.
So it's a fee?
It's a working capital loan.
It's a working capital loan.
Okay, it is a loan, okay.
You essentially got the money, and they just basically ding you every day on whatever, pay it back.
Yeah. So as soon as that's over, whenever you pay it all back, I would just cut off and just stop doing it anymore and look for alternative types of capital. Because obviously it sounds like you're showing positive, revenue, right? But that daily balance, if I'm a bank or if I'm a lender and I'm looking at that, I'm like, ugh, those margins, I mean, they taking money every day, that's predatory. So.
Hello, Chef Amber. Thank you guys again for your expertise. So I know in Black and brown communities it's normally frowned upon. Debt is frowned upon. And I'm at the point now where I'm trying to raise 7-figure capital and going towards investors. So can you talk about some of the myths and some of the truths behind going into good business debt and what that can do for scaling your business?
Yeah, I think there's a thing, I know you said, there's a thing called good debt and bad debt, right? And essentially, good debt is debt you're taking on to grow, right? So if you're taking on capital to grow, that's going to put you in a better situation. But if you're taking on capital and you're not growing, i.e. you're spending more or your costs are going up, et cetera, that can be considered bad debt. I don't want to put you on the spot, but the situation that you explained, like that's a situation where that's bad debt. That debt is not working on behalf for her to be able to scale. And it's great for everyone to learn from. So I hate you, yeah.
And it happens to everybody.
Yeah, it happens to everyone. I'm not trying to put you on the spot. I thank you for, yeah. Yeah. Well, exactly. That's predatory. And when you annualize that daily rate, it's probably like 22%, 25% annual or more when you annualize that daily transaction fee. That's crazy. But I would say the myths, and there is a myth that I don't want to get in no loan. I don't want to have to pay people back. I think you have to understand what are the levers in taking on debt. And so when I say levers, like what are the things that matter in a debt loan, right? The interest rate, the maturity date or the term date, how much you're taking, what's some other things that might.
I mean, bank finance is really cheap when you think about it. to a point.
Right. To a point.
To a point.
Yeah. It's just getting it.
It's just getting it.
Yeah.
That's the thing. You just got to see where your company's at. Because I mean, if you do bring on an investor, I mean, they're going to pay for that equity.
Right.
So you got to just look at the pros and the cons.
Just like getting a mortgage, we all know that it's cheaper to get a mortgage than it is to live in an apartment. But do you got to have $50,000 in the bank just to get into the mortgage, right? So same concept with debt is that there is a misnomer that debt is bad and debt can if you don't understand the levers, yes, debt can be very bad. If you don't know what you're signing up for, that's why you should always have either your legal advisor or someone who's experienced in business, a mentor. Have them look over the contracts before you sign them, right? Because if you don't know you're signing up for a 25 plus interest rate loan, you're going to be looking at your balance when you've made payments, and then at the end of the year, you're going to be looking like, I thought I made such and such payments, and that annual rate is going to kick in. You'll be like, whoa, all this interest, where did that come from, right? So you end up paying 2-3 times the amount that you actually took out in the loan, right? So really take the time to understand, like, what are the key components of that debt? Are you taking on too much, right? Sometimes you might want to reduce how much you take. The interest rate, understand what's impacting the interest rate. One of the things that I do when I was shopping for what bank I would use, understanding like what is their underwriting process for their different products, right? If you're trying to get a line of credit, okay, tell me how that works, right? Oftentimes we just go fill out the paperwork and then we get a letter that says we were not selected, or we were disqualified, or we would not be moving forward with your application. But you have no idea what the underwriting process was for that bank. If you ask them, they will tell you, right? If you sit down with your banker, this is important of why you should have a relationship with your banker, is because if you sit down and ask them, how do you all underwrite your lines of credit? How do you all underwrite? What are the things you look at? Okay, you want to have a debt to equity ratio of at least 40%. Okay, what does that mean to my business, right? If you sit down with them and understand that, then you'll know which products are good for you. You know what debt is good for you to take on. So,
and I think you have to also look at the capacity, how much the business can afford. Because sometimes you can take on too much debt, and then that can be bad for you as well. So just, get with your banker, look at your goals, and just see what makes sense. And I think, as we mentioned before, when a bank looks at underwriting, every bank is different. Every deal is different. So I think, it really just comes down to, one, is there a secondary source of income? How is the business functioning? Is it, paying for itself? Are you having, positive, net returns, those things? So there's just a lot of factors that go into it. Who is the banker? That's us. I mean, well, in the sense that, okay, so you have commercial, you have small business bankers, you have commercial bankers. So small business bankers can go from companies that are making $1 million up to $10 million. When you start getting into the middle market, it's 20 million to up to 500 million, just depending on the size of your business. But one of the things that we do very well is we don't look at a company based on size or revenue. Like I said, we look at the individual. We look at what you're doing. So hopefully that answers the question. Yeah. Was my colleague? Yeah, all of them. Yeah, Frost. Yeah.
Right. Your banker is not the person that just opened the account. Sometimes it may be, but just make sure you have that relationship with that banker. They know you. Almost you can pick up the phone and call them if you need them, right? Yeah. But just want to make sure that you know that the banker is not just that person because they know your name and can say hi. That's not necessarily your banker. A banker's going to give you some advice like Chris is giving you.
Yeah, Mark makes a good point. Like with our clients, every banker's different, but like with my clients that I manage, they literally have my cell phone number. That might be a good or bad thing, but they can call me anytime. So, I have some clients that call me on the weekend, they just want to shoot the crap, or they just might have something that goes on. So I try to be accessible because I get where you guys are because I've been there before. So, you're trying to navigate, you're trying to figure things out, you're trying to make certain you're making the right moves. So you need to have a good, solid financial partner that can be along that journey with you.
And if I could throw in one more thing, and I'll stop.
Hey, Mike, you want?
When you talk about partners, I was hoping I always define it as a three-legged stool, all right? That partner is a CPA/accountant, an attorney. That attorney is not a divorce attorney. It is not some other attorney. It's a business attorney. And then the other is a banker. So a three-legged stool is your banker, an attorney, or CPA/your accountant. That's going to help your business as you develop, as you prepare to move on, helping you with the right advice. And if I had to make three-legged stool one other leg, I would say a good mentor in the business that you're already in.
Yeah, Mark makes a good point. Find a mentor. Find somebody that's going to believe in what you're doing. And, for me, I had many mentors, and I've had some people that, they say they want to mentor you. They talk a good game, and then you can't find them. So, you know what? Hey, people, they get busy. But at the end of the day, we all know when we want to find time to do something, we're going to make time. So you want to find somebody that aligns with what you're trying to build. And it might just be 15, 20 minutes that you're talking to that person, but find somebody that's invested in you, and that's going to really help you along the way.
And if your mentor tries to charge you, that's a consultant. So just make sure they're not charging you. I think we had time for one more, KG. Is that right? Oh, I'm sorry. Go ahead.
Yep. So you guys did a really great job. My name is Jason Hendricks, and my question is, I believe there's a gap between like the small to medium enterprises and the innovation-driven enterprises, right? So you see these tech companies that can raise millions of dollars, right? Then they can just hire their dream team. But as a small, medium enterprises, you don't have that capital to be able to do so. which puts more like stress on you to wear those many hats, like you mentioned earlier, which creates that burnout, right? So when you said slow down, I put that in all caps on my little to-do list, right? But then I thought about it. Like if you're wearing all the hats and business is still moving, how do you really slow down and pace yourself? Because when you slow down, like the business slow down. So what do you do in that situation?
Great question. And I think in that sense, what I'm really saying in that is not slow down, but I'm saying prioritize, right? And so even though you're wearing all the hats, as y'all know, I'm just going to correlate it to real life, all hats are not the same size. They're not created equal, right? So if you are wearing hats, there's going to be some hats that are more important than other hats, right? So if you think about that, it means slow down and actually prioritize what you should really be focused on, because sometimes when you're a solopreneur and you're in an early stage, there's no job description for the CEO, right? Like there's no job description that you can point back to and say, this is my job. So when you wake up in the morning, how do you know what's the first thing you should focus on? Anybody know? Can anybody tell me what's the first thing? Like what's their strategy? When I wake up, I know I'm focused on this. Come on, I know we got some I'm calling y'all out now. Sales, okay. Social media, see that is the wrong answer. So the bank account, she checks the money. Okay. Deliveries overnight, right? So depending on your business, that's going to be different, right? Meditation, okay, yeah, right. So what I'm saying is not slow down as in don't stop running your business, right? But sometimes you got to step back and reassess, where is my time and my energy going, right? Because if it's the first thing you do is wake up and you scroll social media, think you just wasted an hour. You just wasted an hour of precious time that you could be putting into other elements of the business that are moving forward, right? So it's not about slowing down. It's about prioritizing and making sure that your energy is going into the things that really, truly matter, right?